Wall Street is shifting into reverse. It's giving up much of the big gains it made a day earlier on belief that the Federal Reserve wouldn't be as aggressive as some feared in raising interest rates to fight inflation. The S&P 500 fell 2.6%. The index climbed 3% on Wednesday for its biggest day since May 2020. The Dow Jones Industrial Average fell 2%, and the Nasdaq fell 3.7%. The reversal follows the Federal Reserve's decision on Wednesday to raise its benchmark interest rate by 0.5 percentage point. This as it tries to tackle persistently high inflation made worse by Russia's war in Ukraine. All right, well, meanwhile, inflation, rising interest rates, and market volatility continue to concern investors. And as these markets continue to shift and react to large-scale events, how can investors feel secure in this ever-changing world? Well, joining us now to talk more on this is Mr. Thomas Caldwell, chair of Caldwell Securities Limited. Sir, welcome back to Forum Daily.
Thank you.
So today we're talking about market volatility and market negativity. So what should investors really worry about amid this constantly changing environment?
Well, the number one thing they should worry about is emotions. If there's any time that people have needed advisors, it's now. Because let me give you a cliche. There's an old phrase, if you're in a poker game for longer than 20 minutes and you don't know who the patsy is, it's you. And the markets have a lot of influences on them other than fundamentals. In many ways, it's kind of rigged. For example, everybody kind of expected a 50 basis point increase, and that was normal, and the Fed telegraphed that. Then, of course, the rumor gets started, oh my gosh, it's going to be 75, and everybody spread that rumor. And the short sellers, you can really hit a few key stocks with levered products and drive a market down. And that's what happened on that rumor, although everybody felt it was 50 basis points. So they come with 50 basis points yesterday. So you get a relief rally, back up another 1,000 points. And everybody's all really happy with it. Now the shorts are selling, covering their positions. That's what ran it back up. And now it's filtering back again. So there are a lot of influences other than economic that are impacting markets. And unless you quell your emotions, you will be subjected to that kind of nonsense. The market in many ways is rigged. And you just have to understand that. There's some players in there who manipulate so they can do short-term trading.
Now, there seems to be a lot of negativity throughout all of these world events impacting the markets. But is there some silver lining that we should look out for?
There's always silver lining. It's, what one has to do is to plow through the negativity and see what the possibilities are going to be. I mean, if you take a look at the future, interest rates are going up. Well, guess what, kids? Banks make money on increased interest rates. I've noticed with my own lines, I get charged more the second rates go up, but they don't give me more on my deposits on the other side. The net interest margin expands. This is good for banks. And by the way, US banks, just to give you an example, we're going to see a major rebuilding of America as they shorten supply lines, as they go domestically with production. You're going to see more. That's going to be monster financing, a lot of opportunities for the big banks, corporate finance. So I think we're going to see a rebuild that could be even rivaling the early 50s. So I think there's a great opportunity there. Similarly, we've cut oil production because governments decide they're going to be politically correct. And if you cut supply, guess what? The price goes up. So I just lightened a little bit of oils today, and I made a massive amount on energy betting against government. So there's lots of things to do. You can get trapped in the negativity, and that's the danger with investors. They get trapped in that because we're inundated with negativity all day.
Good to know there are some positive developments to keep our eyes out for. Now, we know that you call yourself an incurable optimist. So what does that mean in terms of the world of investment?
It means the world. It means everything. Because pessimists always stop at the problem. Oh my gosh, the Ukraine, inflation, on and on and on. But guess what? An optimist, you've got to look at the problem and see where are the bargains here? Where are the opportunities here? And remember, wars are inflationary. They chew through, sadly, people's lives, and they chew through materials and everything else. During the Vietnam War, anytime there was a discussion of peace breaking out, the market would go down. But the phrase in those days was, we've had a peace scare. So like it or not, inflation is going to be there for a while. It's probably going to moderate to some degree, and that's going to be there. But you have to look beyond the now. You got to look to what will be and what can be. And that's where you make money, not running with that herd. That's why there's more poor people than rich people.
All right, Mr. Caldwell, a quick 45 seconds left here, but considering you have over 55 years of experience in the industry, how have these markets evolved throughout the decades?
Well, I think there's been a demeaning of investment advice, particularly through the regulatory framework. So that's really hurt. So people are now do-it-yourselfers. And you look at things like Robinhood and whatever. And listen, God bless them. There's nothing wrong with that, but they're getting killed. You just look at what's happened to Robinhood stock. The do-it-yourselfers and the furnace rooms are getting massacred in this market. And I think that's one of the things that people are missing. So we've got away from bouncing ideas off of people, and people have bought into the game that, oh, my transaction cost is the most important thing. No, that's not. It's about ideas, it's about experience, and it's about quelling your emotions.